Hello investors and traders. Today I'll speak about two dividend stocks for me the best buy for the next year. And let's start with the first one, it's AT&T. So from the beginning let's start with the technical analysis using the Elliott waves. So in my mind, yeah, it's a monthly time frame. It was the first wave, the second, the third. It was the impulse here, and now we're in a correctional wave, the fourth wave. In my mind, here it was clean ABC move, there another ABC move, and now we are finishing. Here we have a decreasing channel, and most probably here the fourth wave will finish. And then after the fourth wave, of course I'm expecting fifth wave. It most probably will be the higher than the third wave. So in 5-10 years there's a nice probability to see AT&T stock higher than $40. By the way, here we have a major support level. It's here is $15. So in this level 15-20, I think it's very nice levels to buy dividend stock if you're a dividend investor. In my mind, it's very interesting investment. Let's have a look on its fundamental parameters. We can see that debt to EBITDA ratio is less than 3. It's quite good, and interest coverage also is okay, about 4. The marginality, gross margin 53%, very impressive figure, and net margin 12%. So also it's okay. The valuation now, P ratio is 6 and PS less than 1. So it means that for 83 cent you can buy $1 of revenue of this company. And also, of course, it's a dividend stock, so we can see that forward dividend yield is higher than 6%. And by the way, the 3-year dividend growth rate is higher than 1%. So the company continue to increase its dividend payment. Here we can see the AT&T business model. The revenue for the last year was $168 billion. Gross margin is 52%. Operating income is 60%, and the net income marginality is about 12%. We can see that there is a lot of huge amount SG&A. It's selling general administrative expenses for salary, for staff, for the leasing, so for rent, so all this stuff you can find in SG&A. Here we can see the operating revenue by business segment. We can see that 67% AT&T earning communications. Also we have a video part, Warner Media, and Latin America. By regions, if we will see the geographic regions, we can see that in US the bigger amount, about 90% AT&T earn is in US. Also have a nice revenue in Europe, in Brazil, and in other countries. And let's have a look on the next stock for today. It's Altria Group. It's a consumer non-durables products. It's tobacco companies, cigarette companies. By the way, the ICAS, all this stuff is also related to Altria. So here in a monthly time frame, in my mind was the first wave, the second, third wave. Usually third wave the largest wave in the impulse, and here we had the correction, and now in my mind there is nice potential to see fifth wave. Let's have a look on Altria fundamental parameters. We can see total score 77 points. And also here the debt to EBITDA ratio about 3, but interest coverage is very strong, is about 10. So any problems with that for the company? By the way, the Altman score is about 4, so the probability of default in the future years for this company is very low. The marginality, the gross is 67, net margin is 22, so very impressive figures, and the valuation now P is 70, but forward is less than 10. Regarding the dividends, we can see that current dividend yield is about 8%. The company continued to increase the dividend payment by more than 5%. For the last year, by the way, operating revenue by business segment for Altria is 87% is smokable products, oral tobacco products is about 10%, wine, the company is even engaging in the wine business is less than 1%, and all other also very small amount. If we will check the projections focus for this company, the revenue will continue to be very stable, the EBITDA of this company will be very stable, and EPS, earnings per share, will show us a slight positive dynamic. So generally speaking, both of these companies, AT&T and Altria, I hold this in my portfolio. I like dividends. The dividend yield is more than 6%. In my mind, these two companies are very stable, nice dividends. The payouts are fine, and by the way, these companies continue to increase their dividend payments. Now the stock market, by the way, S&P is down about 20% this year. My projection that maybe we will see the wave B in the next week, so I'm not sure that it will be a very good performance of the S&P and Nasdaq for the next year. So anyway, now it's not a bad time to buy dividend stocks like Philip Morris, like AT&T, like WBA and other interest stocks. So if you like this video, press the like button, subscribe to my channel. I have a lot of videos about dividend stocks, stock market, technical and fundamental analysis. So see you in the next time. Bye.